Okay, let's dive right in. Today, we're pulling back the curtain on something that's really shaking things up in India's investment world, the Specialized Investment Fund, or SIF. You can think of it as a whole new playbook for building wealth.
Have you ever felt, kind of stuck? Like, on one hand, you've got your standard investment options. They're easy to get into, but maybe a little basic. And on the other hand, you have these super sophisticated, flexible strategies, but they're usually just for the ultra-wealthy. What if there was something that filled that gap?
And this lays it out perfectly. Over on the left, you've got mutual funds. Super easy to get into, very well regulated, but they're mostly limited to one main play, betting the market will go up. Now, look to the right. You've got PMS, that's Portfolio Management Services, and AIFs, Alternative Investment Funds. These things can do almost anything, but look at those entry points. We're talking 50 lakhs, even a crore. That leaves a huge empty space right in the middle. So how do you bridge that gap? Well, that is exactly why the Specialized Investment Fund was created. It's a solution that's tailor-made to open up more advanced strategies to a wider group of investors. A SIF is basically a hybrid. It takes all the good stuff we like about mutual funds, the trust, the transparency, the fact that it's regulated, and it merges it with the kind of strategic firepower you'd normally only see in those high-end alternative funds. It's really trying to be the best of both worlds, all wrapped up in one neat, regulated package. Okay, so let's get into the nitty-gritty, because this is what makes SIFs so compelling. First, that minimum investment, it drops way down to a much more manageable 10 lakh rupees. The tax rolls? Simple, same as a mutual fund. And crucially, it's all regulated by SEBI, so you have that strong safety net. But here's the real game changer. It unlocks a whole new level of investment flexibility that your average fund just doesn't have.
So, that's the basic setup. But what's the secret sauce here? What really makes it different? Let's get into the long and short of it. This is the core power that makes an SIF tick.
The breakthrough is actually a simple idea, but it's incredibly profound. It's the power to go short. For the first time in a fund like this, managers can not only bet on the stocks they think will win, but they can also make money from the assets they think are going to lose.
So what does that actually mean, to go long or go short? Well, a long position is what we all know. It's classic investing. You buy something because you think its value is going to rise. A short position is the exact opposite. You're placing a bet that an asset's value is going to fall. It's a massive new tool in the investor's toolbox, letting you find opportunities no matter which way the market is heading.
And this table right here, this shows you exactly why that matters so much. Just look at those highlighted rows. In a regular long-only fund, a bad market, a bear market, a volatile market, that usually means you're losing money. But with a long-short strategy, those very same conditions, market corrections, downturns, crazy volatility, that's where it's actually designed to thrive and potentially outperform. Okay, so we know SIFs can go both long and short, but how do they decide which stocks to bet on and which to bet against? For that, we need to pop the hood and look inside the engine. This is all about the data that drives these funds.
The whole philosophy here is called systematic active investing. Now that sounds like a mouthful, but it just means this isn't about a fund manager's gut feeling. It's a super disciplined, data-first approach. It uses clear rules and signals from the market to spot opportunities, manage risk, and make adjustments with total precision.
And to do this, they use two main types of data. First, there's low-frequency analytics, or LFA. The analogy here is perfect. It's like a race car's pre-race map. It looks at the big, long-term picture. But the real edge? That comes from high-frequency analytics, or HFA. This is the race car's live dashboard, analyzing data as it happens, tick by tick, to make split-second decisions.
This chart makes the difference so incredibly clear. A typical mutual fund might get 70% of its info from that long-term map, but these SIFs, they completely flip that script. They're getting 70% of their insights from that real-time live dashboard of high-frequency data. They are built to be fast and responsive.
And what's the brain that pulls all this complex data together? Well, it's typically a powerful proprietary tech platform, a central nervous system that can turn billions of little data points into clear, actionable investment strategies.
All right, enough of the tech talk. Let's get down to what really matters, the portfolio payoff. How does all of this fancy strategy and data actually help you as an investor? What's in it for your portfolio?
First up, the potential for lower portfolio volatility. The whole idea here is to try and smooth out those wild swings in the market, giving you a much calmer ride.
Second, you get much better diversification. Because the fund's success doesn't just depend on the market always going up, it adds a completely different layer of stability to your overall portfolio that you wouldn't get otherwise.
And third, and this is a big one, it offers a totally new source of alpha. Now, alpha is just a finance term for making returns that are better than the market average. And the ability to profit from falling stocks, well, that opens up a whole new world of opportunities to find that alpha.
So finally, let's just zoom out for a second and look at the bigger picture. The creation of SIFs isn't just about a cool new product. It signals a real evolution, a new chapter for the entire Indian market.
And you've really got to give credit to the regulator, SEBI, for this. This is all part of a much bigger vision they have. They're trying to open up these sophisticated strategies to more people, balance that innovation with real investor protection, and really put India on the map as a modern, forward-thinking place to invest.
I love this quote from the Nobel laureate Robert Shiller. It just captures the whole spirit of this new approach perfectly. It's about letting massive amounts of data show you what's really going on in the market to help you see a new reality.
So when you put it all together, the accessibility of a mutual fund, the power of a hedge fund, all of it driven by lightning-fast data, you get a really compelling new model. It leaves us with one huge question, doesn't it? Is this flexible, data-driven approach the future of investing for a whole new wave of